Welcome to Standard Chartered India Money Insights, a podcast series that brings you topical insights and local perspectives on India's markets from the experts.
Hello everyone, I'm Ravi Singh. Welcome to another edition of our weekly podcast, The Week That Was. Indian assets recovered from a two-week losing streak amid positive global cues as developed market equities unwound from oversold conditions over the past week. The S&P 500 index rallied 3.1% on Friday, recording its largest single-day gains in over 2 years, on reports of a downward revision to long-term US inflation forecast. After last week's advances, S&P 500 index has recovered from the technical bear market territory and is still 18% down from its record high in January this year. After a positive start, Indian equities came under pressure midweek but rebounded later on positive global sentiments, softening in crude oil prices, and a progressive monsoon. The Nifty index rose 2.7% over the past week and outperformed most regional peers. Broader markets underperformed Nifty, with Nifty Midcap Index gaining 2.2% and the Small Cap Index gaining 1.7% over the week. Among sectors, all sectors ended the week in green except energy and metals that fell over 0.6%. IT, FMCG, and auto were the best performing sectors with gains of over 4% during the week. Indian fixed income market had a decent week with bond yields rising across the sovereign and corporate bond curve as US Treasury yields continued to trend lower and softening in crude oil prices continued. However, bond yields edged higher on Friday after minutes of the RBI's monetary policy meeting showed that members expect inflation to remain elevated for the rest of the year, necessitating a firm policy stance to ensure price stability. For the week, the 10-year Indian government bond yield closed at 7.44%, down 10 basis points, while the 3-year and 5-year Indian government bond yields fell 7 basis points and 11 basis points respectively. Yields for the 3-year maturity AAA, AA, and single A rated bonds fell 7 basis points each during the week. The INR continued its downward trend, hitting a new all-time low as demand for dollar by oil importers remained high while foreign portfolio outflows continued. The INR closed the week at 78.34 per dollar, down 0.3% for the week. Over the coming week, all eyes will be on the release of domestic economic activity indicators data and movements in domestic and global equity markets. With this week's recovery, Nifty index is now trading at 17.2 times 12-month forward price to earnings ratio, marginally higher than the 10-year average of 16.9 times. But it's still 15% lower than its October 2021 peak. At this point, I'll take a pause and thank you as always for listening.
Thank you for listening to Standard Chartered India Money Insights. Stay tuned for the latest updates and market trends by subscribing to our podcast. For more information, reach out to your Standard Chartered Relationship Manager or visit www.se.com/in.